Nuclear energy is a very controversial topic. Is it green energy? Is it dangerous? Is it the panacea to our energy woes? I don't know, but let's just pretend that nuclear is the way forward. If it is, what stocks give you exposure to this theme? Are some riskier than others? We'll answer those questions and more today as we look at a plethora of nuclear energy stocks. Now, the big news around nuclear was this announcement of the 3 Mile Island plan to reopen. As they say, demand for nuclear power grows. I think it's just demand for power in general. So all the data center providers like Microsoft have a source of energy. And here you see in this article by the New York Times, they say Constellation Energy announced that it's working on a deal. So you want to pay attention to verbiage always. In fact, they're not just appearing to work on a deal. They actually signed a deal with Microsoft to restart this plant by 2028. If approved by regulators, Microsoft will purchase up to 830 megawatts of power from 3 Mile Island over 20 years to power its data centers. A few things here. First of all, how much power is that? So we want to put that in context. Second, why was this U.S. nuclear plant decommissioned in the first place? And when we look at this press release from Constellation announcing this agreement, it talks about, you see the amount of energy there, and it refers to the plant and says before it was prematurely shuttered due to poor economics. So what makes the economics so good right now? That's an obvious question, and I don't think we have the answer to that. But in order to put this amount of energy into context, what we can do is look at the total capacity that Constellation has from their website, 32,400 megawatts of capacity. We can then look where they say 12,000 megawatts come from other fuel assets. And then we can deduce that around 63% of Constellation's capacity is nuclear. And then if we just do some simple math, the Microsoft contract is going to represent about 2.6% of Constellation's capacity. And here you can see they talk about that 20-year fixed price contract. So I'm sure this is bog standard stuff in the utility industry, but fixed price is often problematic for companies that commit to something so they can land a contract and then end up finding out there are skeletons in the closet that they didn't know about. So they plan to bring this capacity online in 2028. So we're talking, at least 3 years from now, and then they're going to plan to run it for more than 20 years. And here you could see where they said that this should increase earnings per share growth from at least 10% to at least 13%. So just that small amount of additional capacity online. It's important to note here that nuclear can operate cheaper than other energy sources, but only if it's already in commission. So we're going to talk more about that. And if you want to read more about the deal, go to Constellation's website. You see here this presentation they did on September 20th talking about the deal, and there's plenty of added information in there. So just a quick disclaimer here. This video was recorded the weekend following the big Microsoft announcement. I'm up here at the beautiful Mount Adams there behind me, doing some hunting for chanterelles and also covering the latest news and tech that our subscribers might find of interest. The returns we're going to talk about today are how certain stocks performed the day that Constellation and Microsoft made that announcement. So that was Friday, September 20th. The share price action on that day is interesting because it shows us all the names perceived by the market to be plays on nuclear. So this video is actually going to be published several weeks later due to some of our staff being on summer holidays. So this will be great because then we can all see what happens when the nuclear dust settles a bit. So when that deal was announced, Constellation saw shares rise 22%. Now for a $80 billion company, that's quite the jump. And does that not seem a bit excessive considering the fact that this is at least 3 years down the road? There's a lot of uncertainties, possibly some risks for Constellation when they try to put this all together. Well, I don't know, but when looking at their latest investor deck, I found an interesting slide here which shows competitive nuclear generation capacity by various firms. You see them listed along the bottom, and the capacity that Constellation has dwarfs their closest competitor, as you can see based on this chart. And I've also pointed to this middle chart, which shows the largest producers of carbon-free generation. So that's interesting because NextEra Energy is the largest renewable energy company in the world. Now, would you call Constellation that? Well, It depends on whether or not you call nuclear energy renewable. And this is a big point of contention. We're not going to get into that. But I thought that was interesting that they produce so much carbon-free energy that they're actually ahead of NextEra. Now, when we look at all these firms, we've simply looked here at their one-day return, and then we went and figured out as much as we were able to based on publicly available information. It's not easy to find. What percentage of their total electricity generation was nuclear? And as you can see here, Constellation is a pure play, 63%. That's a lot. And this other firm, Vistra, which also saw shares rise quite a bit on the day of that announcement, it's only 16% for them. So that's something to note. Just because a company operates nuclear reactors doesn't mean that you're getting a lot of exposure to that particular theme. I've also noted Sprott's Physical Uranium Trust here, which was up 3.5% that day. And it's very important always to use a benchmark. I've put on the lower left here some popular benchmarks so you can see that the market wasn't very active at all that day. So these returns are certainly excess in respect to the market. Now, these weren't the only companies, the two on top there, that saw hype. Shit media content that you often see around events like this helps fuel that hype. And here I've pointed to some of these articles. One from The Fool there talks about why all these stocks, quote unquote, popped. And then I love this little imagery here that shows the lowest risk possible. These are not low risk. Volatility in itself is risk. So more misleading content from The Fool. One growth stock, this is here from TradingView, under $20 to invest in the nuclear energy boom. Nothing says amateur hour pundit like somebody who refers to the price of a stock as cheap. Under $20 is not cheap. That's not how we assess whether or not a stock is cheap. This other article here by CNBC, this power company has outpaced NVIDIA, could ink next nuclear deal after 3 Mile Island. They're talking about Vistra. We don't like coulds, right? We could speculate all day. That and $5 might get you a Big Mac. Then at the bottom here we see SMR stocks, two small modular reactor stocks to watch. These happen to be two firms, SMR and BWXT. So I just wanted to point to our tech stock catalog. And if you're somebody who's a premium annual subscriber, you have access to this. It has 460 stocks. And in there, we have this notes field for all of these stocks, along with a link to the most recent research. And these notes provide a very quick summary of our sentiments towards these 460 stocks. So make sure to download that Excel spreadsheet and give that a look. And the bottom here, you can see uranium. So a subcategory there, we have two nuclear stocks, BWX and NuScale Power. We're going to talk about those in a second. But when it comes to uranium, I think this is worth pointing out. Look at the notes field for this. It says, Cameco's the best uranium stock out there for those investors who find the uranium mining thesis compelling. We find it to be filled with far too many uncertainties, which is typical of commodities. We don't really invest in commodities aside from some gold for diversification purposes. But let's talk about these two companies very quick. You have BWX Technologies. Again, as the notes field in the catalog says, there's far too much dependency on the U.S. government. Any firm that has more than half the revenues coming from the U.S. government is a no for us. There's just too much risk there. The government has all the chips at the negotiating table, and things are only one new administration away from changing. And then when we look at NuScale, so in our notes field, we said that we're not really seeing how this firm can thrive, and this just spells it out. So take a look at their revenues there and their cost of revenues. First of all, when you have COGS that's close to revenues, that's not good because it means that you're not able to provide a product or service at a profit. And here you can see revenues on the decline over time, and that's rather alarming. And in the most recent article I found talking about NuScale, it said that their net losses continue to mount. You can see how their operating expenses are just ludicrous when compared to revenues. And revenues came in under $1 million, but executives maintained their confidence. And here they mention, particularly from large load customers such as data centers. Yeah, we don't really care about their confidence. We care about what's happening now, and what we can see here would be declining revenues and ridiculous levels of operating expenses. So there are multiple ways to play nuclear. I think you have competitive generators of the type we talked about. Constellation is the leader by volume and by pure play, so that's rather attractive if you thought nuclear energy was on its way up. Then you have man with a plan, SPACs. This simple rule has saved us more money and pain than any other rule that we have. It's no revenues, no interest, no exceptions, all right? Then you have ETFs and funds. These are a mixed bag when it comes to exposures, as is typical of most ETFs, to be honest. Then you have uranium as a commodity, and we covered that before. We'll put a link at the end of this presentation to that piece we did on uranium. So I wanted to talk briefly about a SPAC that's been getting a little bit of hype. So this is the Oklo deal. Sam Altman, you see here pictured as somebody who's involved with this. The company has yet to generate revenue as no nuclear plants deployed. They're targeting 2027 for the first plant to come online, and shares were up 27% on that news of that Microsoft deal, which really there's no reason at all for that. Then you have Nano Nuclear, another small company, I think under $400 million market cap, that saw 23% share price rise with that news. They raised a whopping $15 million during their IPO. They signed an MOU and some sort of collaboration, and they say that in the next several years they might have a prototype. Well, that's great. Wouldn't touch it with a 10-foot pole. Expect to see lots of progress by press release, things like we just hired 2 engineers. We don't care that you hired 2 engineers. Let us know when you actually have a prototype, and we'll take another look. Now, when we think about nuclear energy more holistically, we like to pull up this chart from Lazard, which shows the levelized cost of energy comparison. That is, if you took out all subsidies and penalties and everything and just looked at the cost to produce energy. And here they've assumed something interesting. You see the total operating capacity for this reactor would be a capital cost of $31.5 billion. These things are very expensive to build. An operating life of 60 to 80 years, okay, that's reasonable, and close to 6 years to build. So if you want to ramp up nuclear, you're going to go through one additional administration on your way there, which could wreak havoc, especially if the government is helping push nuclear. So that's one thing to note. Here you can see how expensive it is, and that's because of those costs. But once you have the nuclear reactor up and running, it's actually quite cheap, what they refer to as marginalized costs. Now, what might help nuclear a lot would be technology. And we've looked at things like fusion. It's always 5 years away, and you can read through our website all the pieces we've done on nuclear technology and fusion. We used to cover that a lot. These days, we mainly focus on publicly traded firms. But when it comes to new nuclear technologies, we've looked at things like molten salt and small reactors. This seems to be the way forward. You can read this quite good piece on some of the firms leading the charge there. Search our website for that. Building new nuclear plants as we know them today requires a lot of capital and time. However, the marginal cost of running existing nuclear plants is much cheaper and simpler than building up new plants. There you can see on the bottom. So you're wondering, why did Microsoft decide to take up this deal? Well, it appears that might be competitive. You see here it's certainly more competitive than gas peaking. It's right around coal there. More expensive than gas combined cycle. But are there any other unused nuclear plants laying around that we might bring into service? I don't know, but certainly we're seeing some nuclear hype. When stocks of a feather move together, it's typically because they share the same GICS classification, and these risks can be quantified. GICS stands for Global Industry Classification Standard, something that was developed by MSCI and S&P Global. And it's used to classify what stocks do. Now, in the absence of a GICS relationship, because there's no GICS code for nuclear energy, hype often moves thematically across related stocks based on positive news for one name. That's what we saw on September 20th, right? Gene editing stocks are a classic example of what happens when that hype gets out of hand. You've also seen this with nano stocks, 3D printing, AI stocks, of course. Across the entire domain of nuclear stocks, we're seeing momentum, but don't invest because of some foolish take on nuclear. One wrong headline and volatility is going to head exactly the opposite direction. That's why you might want to invest in some known goods like Constellation if you were thinking about that. And as for us, we're happily invested in our dividend champion NextEra Energy, which we've owned for a very long time based on our dividend growth investing strategy. So if you're looking at nuclear and you think that uranium's one way to play that, well, we've covered that, and this piece would be next to watch. Check that out. Make sure to subscribe to our channel. Thanks so much for taking the time to watch this today.